Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call again. Yeah, we saw the U.S. markets like the S&P 500, the Nasdaq in slightly positive, but we did see the Russell 2000, that small cap area, down about 0.5%. So what surged the most, we really saw energy stocks. They surged about 7% due to about an 8.5% rise in crude oil prices amid some Middle East tensions. From a jobs report status, we saw the September's non-farm payroll exceed expectations. Now that was up about 254,000, blew it away. That lowered the unemployment rate down to about 4.1% and boosting some wage growth, creating some concern that, hey, listen, maybe the Fed doesn't have to be so quick on lowering these rates. Now, we go over on that side and look at interest rates. We did see the 10-year U.S. Treasury yield really pop up, almost till 4%. We also had Fed Chairman Powell indicate some cautious approach to rate cuts, emphasizing that they're going to continue to be data-driven in all their decisions that they make for this. Now, let's look at maybe some strikes and claims and different things that were going on. So the weekly jobless claims remained pretty low. The future data might be affected by some of the Hurricane Helene claims that were out there, as well as the Boeing strikes. Maybe some dock workers, but I think that was resolved pretty quick, so I don't know how much that's going to be showing up in the numbers. But from a global standpoint, kind of going overseas here, we're going to be looking at the Eurozone. CPI numbers fell below 2%. Now, that was the first time in 3 years, hinting that maybe they got some rate cuts here to follow here soon. China's markets remain pretty strong despite some contraction in factory activity. Now, this week's a pretty big week. Obviously, we got a lot of Middle East tensions and conflicts. That's putting a lot of pressure on the markets. That's putting pressure on the energy markets. We'll be looking at some U.S. data numbers that'll be coming out this week, like inflation data, some Treasury auctions, kind of what's the appetite for that. We'll start to look at some third quarter earnings. That's going to be coming at the end of the week when we're going to be someone that sees the major banks starting to come out, like JP Morgan Chase, Wells Fargo, Bank of America, BNY Mellon will be coming out. But we'll be getting some CPI reports that could support some interest rate cuts, and the Federal Reserve's minutes will be coming out as well. Other U.S. data that'll be being reported this week would be consumer credit figures, some preliminary consumer sentiment numbers, inflation expectations are started unrolling, if you might, for October. Internationally, again, we're going to be looking at some retail sales number. Germany will be reporting some industrial production, maybe some factory orders. And with the British pound, the pound fell last week after the BOE Governor Bailey hinted that possible further rate cuts are going to be needed if they continue to see some disinflation. Jeremy?
Got it. Well, Graham, I had a question for you. You mentioned it. Maybe the yields have been moving higher here. What thoughts on that for the people listening here?
Yeah, I wouldn't get too crazy about that. Keep in mind that the market, really led in the advance, the stocks. So don't be surprised you get a pullback, a digestion that might be healthy for this market. October is usually a bit weak. And we kind of had the same thing happen with the 10-year and the bond yields. On the 10-year, that thing shot down to 3.58 at one point, from well over 4 or 5 at one point. So they had some room to kind of moderate back up because I think the market was a little bit too aggressive in what the Fed might be doing in the short run with interest rates, even though they did lower 50 basis points, which was a bit of a surprise to me. So I would take it all with a grain of salt and just think about it this way. What directions are rates going over time? That's the key. If they're going down, patience is going to be a virtue here. Things will work out.
Got it. Well, we always appreciate the expertise
You
and
got
thank you
it.
to our listeners. And if this is you're new to this, check out our social media, check out our website. We have all these previous weekly wrap ups and stuff on there. And we look forward to seeing you next week.
Take care.